Hello guys and welcome again. So I guess this is the fifth installment of the all the possible transactions in basic accounting. So we have already talked about until number 43. So we have at least, I don't know, 15 transactions left. So we have number 43 right here. This is related to number 36, and we go to number 44. Again, what we're doing is that we have our transaction. We have to analyze the effects on the A is equal to L plus C, and then we have to make a possible journal entry. Alright? Now, since number 44 is related to number 36, let's go back first with number 36. In the number 36, the company purchased goods on account with the credit terms 3, 10, and 30. So we are the purchaser here. The cost of the goods is 280,000. The freight paid is 12,500. The shipping terms is FOB shipping point freight collect, and the goods are already shipped but are still in transit, and the company used periodic inventory system in recording. Okay, so that is the transaction. Okay, the goods are already in transit, FOB shipping point freight collect, periodic inventory system, credit terms 3, 10, and 30. That means when we pay within the discount period of 10 days, we're gonna enjoy 3% discount, and the cost of the goods is 280,000. Okay, you have to remember that. Now let's go to number 44. Related to number 36, our company paid 180,000 of the payables within the discount period, and the rest are beyond the discount period. Again, on the number 36, the credit terms is 3, 10, and 30. The cost of goods is 280,000. So that means 180,000 was paid within the discount period. So let's focus on that. Alright? So there are two analysis that we're going to make here. The 180 and the 100,000, which is not paid within the discount period. So let's start with the 180,000. So let's copy this. First off, it's very clear that your liabilities will be reduced. Alright? So we're going to reduce our liabilities by 180,000. Here. Oh no. We have to reduce liabilities 180,000. That's it for the liabilities. And also we are going to reduce our cash because we are paying for 180,000. But then again, the cash that we're going to pay is lesser than 180,000 because we paid within the discount period, and the discount is 3%, so times 0.97, that's 100% minus 3% discount. We have 174,600. Okay, so is it balanced? No, of course not. So the balancing figure is immediately on the discount, purchases discount. So the difference is 3%. Okay, 174 minus 180,000. You have 5,400. Okay, so we have to add here 5,400, and we have to put purchases discount. So if purchases is a little bit of the nature, I told you in the past episode, you think of it as an expense, the nature of it. The purchase discount, I have to let you think that this purchase discount is actually a revenue account. The higher the purchase discount, the higher the net income will be. Okay? So that is the analysis already. How about when making journal entries? Of course, you have to debit accounts payable. Okay. Debit accounts payable in full, not the discounted one. 180,000. Okay? And then we have to credit cash. not the 180,000, it's only 174,600. Okay? And then another credit also is the purchase discount. 5,400. And that's it for the 180,000 payables which are settled within the discount period. How about those that were not? Since in number 36, the whole accounts payable is 280,000. This is not a payable, this 12,500, because as the buyer, we are the ones who paid for it. We should pay because it's FOB shipping point, and we did pay because it's free collect. So the only accounts payable that we are going to consider now after the 180,000 is the 100,000. And of course, that 100,000 is just, you have to reduce your liability, 100,000. And then you have to reduce your cash also, 100,000. There will be no discounts because you paid for it after the discount period. So, what is the entry? It's debit, accounts payable. So, debit, accounts payable. That one. And then, you put it there, 100,000. And then, credit cash. 100,000. So again, this is beyond the discount. These are the analysis on the within the discount period, and this one is beyond the discount period. That's it for number 44. Now, number 45. So, since it is related to number 36, it doesn't, it means it is not related to 44. It's just related to number 36. Again, the assumption is that each of the transaction or line item is independent with one another unless it is expressly stated, just like this, that it's related to an item. So on the number 36, we already know the transaction in number 36. Let's just analyze. The company returned half of the goods to the supplier due to damages and incorrect items delivered. So that's number 45. So what will happen if that's the case? So as to the assets, since you returned and still we're using periodic inventory system, what will happen is that your capital will be, added. I guess that's added. Yeah, it's added by 180,000. Am I right? Is that 180,000? 280. Number 36, that's 280, I guess. So one half of that is 140,000. So your capital account will increase by 140,000 and your liability will be decreased by 140,000. Why? Because you returned the goods. So your liability will be diminished or decreased. And of course, we have 140,000 in the capital in the form of purchase returns. If the purchases account is an expenses, I'd like you to think that those are expenses. And the purchase discounts, I'd like you to think that those are revenues related or income related. These purchase returns and allowances also are considered as revenues. As you can see, it increased the capital. And as you can see, based on our analysis, the A is equal to L plus C is still balanced. Okay? So what will be the entry? The entry will be debit accounts payable because you have returned 140,000, and then credit purchase returns and allowances. Okay? So that's the analysis. That's the journal entry. Debit accounts payable because you have returned something, and then credit purchase returns and allowances worth 140,000 also. So that's number 45. Now let's go to the selling side. So the company sold goods on account to Papa G Company worth 560,000. So we have our customer Papa G Company. We sold 560,000 worth of goods with credit terms 5, 10, and 30. So we're giving them, the Papa G, a chance to pay within 5 days, and we will give them 5% discount. The cost of such goods is determined to be 400,000. Okay. That is normal, of course. When you buy and sell merchandise and you are a merchandising entity, of course, you're going to sell it at a markup. The shipping terms are FOB destination, freight prepaid, and the goods are already shipped but still in transit to the buyer. So the shipping cost is 50,000. And of course, periodic inventory system is used. Okay? Alright. So, again, the question is, what is your point of view? The point of view now has been shifted from being a buyer to a seller. Okay? So, second question. Who is the owner of the goods that are already shipped and are in transit to the buyer? So what is the shipping terms? The shipping terms is FOB destination, freight prepaid. Okay? So who's the owner of the goods? The owner of the goods is us as the seller. So will we have an entry related to the sale, like accounts receivable, credit sales? No. Because it's still ours. We did not transfer the ownership or the title yet to the customers. So the analysis is no entry. Okay? And since it is already shipped, that meant you have already paid for the freight. Okay? So the third question is, who actually paid for the freight? The seller. And we are the seller. Okay? So we will have an entry. First, let's analyze. What will happen to the assets, liabilities, and capital? As to the assets, since you have already paid 50,000 shipping cost, the asset will be decreased by 50,000. Cash or credited. There is no liability effect. And of course, we will have a credit 50,000 because of freight out. Okay? Freight out. Freight out, you have to think of this as an expense because this is actually part of the selling expenses. The delivering to your customers is because of selling to them, right? So this is part of the selling expenses. So what is the debit? Freight out. How much? It's 50,000. So again, I'd like you to think that this freight out account is an expense, all right? And then the credit is cash, 50,000. I mean, that's it. That's your analysis for number 46. Okay? Now let's go to number 47. It's the same with number 46, but according to here, the goods are shipped FOB shipping point freight collect. So, question, what is our point of view? Seller. Second, who's the owner of the goods? The buyer already because of the shipping terms FOB shipping point here in number 47. And the third one, who actually paid for the freight 50,000? The buyer. Okay? So that's very important when analyzing. So, let's analyze. First off, oh no. When we talk about the purchases, it's now time to recognize purchases, sales. It's now time to recognize sales because you have already passed on the title to the buyer. Okay? So if that is sales, we will have 560,000 here. Alright? 560,000. That is because of revenue. And since we have not yet received anything, we're going to put it on the asset still in the form of accounts receivable. So that's the analysis. Okay? So when you make an entry, you have to put accounts receivable $560,000 and then credit revenues or sales 560,000. So that's the first question. Will you record sales already? Yes, because the title has already been passed to the buyer because the terms are now FOB shipping point. Okay? Now let's go to the freight. What will happen to the freight? So, who is the ones responsible for the freight? Of course, the owner, which is the buyer, which we are not. We are the seller, right? And who actually paid for the freight? Since it is freight collect here in number 47, the buyer paid for the freight. So that meant they are responsible for paying the freight and they actually paid for the freight. So in our side, no entry. That's as easy as that. Alright? Now let's go to number 48. The same with number 46, but the goods are shipped FOB shipping point and freight prepaid. So if that is the case, the analysis for number 47 can be copied already. Alright? Why? Because again, you have already passed the title of the goods to the buyer. So you have to enter already 560,000 accounts receivable and then revenues 560,000. Okay? As to the freight, on number 47 there is no entry because the supposed to be paying for the freight is the buyer and they paid that freight collect. In this case, we will have an entry because although the should be that will be paying the shipping cost of 50,000 is the buyer, we actually paid for it. Freight prepaid, meaning the seller paid for the freight. So what will happen? What will happen is that your cash will be decreased by 50,000. Decreased 50,000 because you actually paid for the freight. And since you are the seller and you have paid a certain obligation that is not yours, you have to add your assets also in the form of accounts receivable. So this is cash, the decrease, but you will add another asset, 50,000 accounts receivable from Papa G. Okay? So that's the analysis in the A is equal to L plus C. Now, how about making an entry? So again, debit accounts receivable 50,000 and then credit cash, because again, you paid for something that is not your obligation. So that's number 48. Now let's go to number 49. The same with number 46, but the goods are shipped FOB destination, freight collect. So again, since this is FOB destination and the products are still yours, what will happen is that there will be no entry on your part, because you cannot make an entry accounts receivable credit sales if you have not yet passed the title to the customer. That's FOB destination. Okay? And as to freight collect, if the buyer paid for the freight, there will be an entry on your part, especially if the buyer paid in advance. For example, the buyer paid in advance, really. So what will happen? So your assets will not be affected because you did not pay for it, right? Your assets will not be affected, but your capital, you have to recognize a negative 50,000 because you're the ones responsible for the freight, because you're the owner of the goods that are in transit under this FOB destination. So you have to credit freight out, or debit freight out. Again, this is an expense, so it's not balanced, right? So what's the other one? The other one is that freight collect, your receivable will be affected. So if you have a receivable from that particular customer, Papa G, for example, Papa G has been purchasing from you ever since, okay? And you have a current accounts receivable from Papa G. That accounts receivable will be decreased. Why? Because Papa G paid for your obligation 50,000. That is the meaning of this FOB destination freight collect. The buyer paid the freight when it should be the seller should pay for the freight. Should be seller, actual payment buyer. So that's what happened. Okay, and this is the analysis. And if we're going to make an entry out of this, we'll have debit freight out, $50,000, and then credit accounts receivable, $50,000. So I guess that's number 49. Let's go to number 50. What if we're going to follow the number 46, but we are using perpetual inventory system? So what will happen is that the entries will still be the same with the number 46. This one, no entry because that is FOB destination freight prepaid. But if there should be an entry, like for example, in this number 48, there is an entry debit accounts receivable 560 and credit sales 560. Okay. So, let's just revise. Let's put here 48 to make it more challenging. Okay? Let's see. Let's put on number 48. Instead of highlighting this number 46, let's put number 48 in the number 48. Let's copy. FOB shipping point freight prepaid. Yan. So, let's put it set numbering value 48, right? Okay. So let's change a bit. Okay? Okay. We don't need to change this. We have already answered it. So the same number with number 48. Okay? So instead of the shipping terms a while ago, FOB destination, FOB destination, I guess FOB destination freight prepaid. We have here FOB shipping point. What is this? Yeah, FOB shipping point freight prepaid. Is this the analysis? FOB shipping point. This is correct. And then freight prepaid. So credit cash because you paid for it. And debit accounts receivable because that is not your responsibility. Okay. To make it more meaningful, let's have number 50. The same with number 48, but the company used perpetual inventory system. Now, on the perpetual inventory system, there will be 2 entries on sales. So in here, in number 48, we have only 1 entry, accounts receivable, credit sales. The other one is for the freight, right? But in the perpetual inventory system, you have to have 2 entries, actually. So the first one is basically the same with this one. Yan. So, if you're going to sell something to a customer and that is shipped under FOB shipping point freight prepaid and it's already in transit, the title has already passed to the buyer. So supposedly you have to record accounts receivable 560 and revenue 560 or sales. So that's what we did here. So in the perpetual inventory system, that is still the ones that you're going to do. But there is a secondary entry. And what is that secondary entry? You have to recognize the cost of the inventory. So what will happen? So there is a cost here, 400,000. You have to analyze that. So what will happen? What will happen is that you have to credit or deduct the inventories. Because when you sell, actually, logically, inventories will diminish or decrease. Okay? So, you have to decrease the merchandise inventory by 400,000. And that is on the asset side. Okay? What is the partner? Of course, the partner is a deduction also in the capital. Again, it's a deduction because the reason for that is the cost of sales. Okay? So, cost of sales is as if an expense also. Basically the same with purchases and freight in. Okay? So, it's an expense. The higher the cost of sales, the lower the net income. You have to remember that. Okay? So, 400,000 cost of sales. So, what will be the secondary entry? The secondary entry will be cost of sales, 400,000. And then credit merchandise, 400,000. So that's it. That's the entry under perpetual inventory system. You will have 2 entries when you sell. Actually, not only on the sales but also on the sales returns. Sales returns is when the customer returns the inventories that you have sold because there is some defect. So if that will be the case, what will happen is you'll record credit accounts receivable because your accounts receivable will be decreased because your customer returned the goods. Okay? So credit accounts receivable and debit sales returns and allowances. There will be a secondary entry just like this one, but it is the opposite. in here we debited cost of sales and we credited merchandise inventory because the inventory is going out of the company. When you sell, the inventories will go out of the company. Alright? But when it comes to sales returns, the inventories will go in the company. Okay? So what will happen is that the merchandise inventory will be debited if we're talking about sales returns, and what will be credited is the cost of sales. Okay? So that's it for perpetual inventory system. It's because if we talk about number 48 and the freight, it will just be the same here. Again, since this is the number 48 is freight prepaid, that means you have paid for the freight, there is a deduction on the asset, specifically cash. And of course, since that is not your responsibility supposedly, because it's the customers, because it's shipped FOB shipping point, you're going to add also your asset, accounts receivable from such customer. Okay? So credit cash, debit accounts receivable. So that's the analysis for number 48. Okay? So let's change this into the same with number 48. The succeeding, we will change it to the same with number 48 to make it more challenging. Because number 46, actually, you have not sold anything, so there is no entry. This is not really challenging. And my goal here is to give you the most challenging transactions, everything about the foundations of accounting, so that you'll become masters. So let's cut this video short. Let's have another video for the next 8 to make this video short. So if you understood, please click like, subscribe, and hit the notification bell. And let's have the final episode supposedly on the next video. See you on the next one.